The following is a conversation with Jay Arlington. Jay is an individual investor with many years of experience in economics, finance, politics, business management, and most notably, semiconductors. Today we will discuss Jay's thoughts on current market valuations, his opinions on Nvidia, what metrics he favors when looking into a stock, and much more. I'm your host Ed, aka Terrible Trader, and if you'd like to support this podcast, check out the Tendies app at tendies.af for a growing suite of free tools for investing and trading like proprietary research, option order flow, earnings calendar, Reddit investing browsers, and many more. Without further ado, here's Jay Arlington.
Hey, how you doing?
Good, man. How are you?
Oh, we're hanging in. Busy day today, right? Spicy, huh?
Yeah, I got wrecked today. It's a horrible day for me personally, but
Oh, I'm sorry.
oh, it's all good. It's all good. Do you want to put your webcam on or do you want to keep it off? To me, it really doesn't matter. But
I'll put webcam on. Yeah.
Okay, cool. All right, cool.
That's fine. I'm usually on webcam, right? So I can't complain.
Yeah, yeah. I'm assuming you're using Nvidia broadcast for that green screen.
Yes.
That's
There's a whole
pretty good.
story behind that.
Let's hear it. What's the story?
No, so back God, this is basically 2001 when my main focus was the steel sector. I was starting to learn more about semiconductors because I knew I wanted to learn like a second sector, something more on the quote growth side. And I had a lot of like kind of like background reasons to kind of pick semiconductors. So I chose semiconductors, and coming off of steel where you value things on like, price to earnings and all these valuation metrics, I kept seeing Nvidia. And back then Nvidia was trading at like 65 to 68 times forward PE. And I was like, I can't.
Sorry, what year is this?
I can't buy into. This is back actually in 2021. So just 2 years ago. Like literally just almost 2 years ago.
Okay,
So
okay.
at that time, I needed a new computer. And I knew I wanted to kind of start streaming. So I went and I was doing all sorts of research on it. And I ended up buying a computer specifically with an RTX 3070 card. And I had access to NVIDIA broadcast. And I started using broadcast. And I was like, now I get it. It's a software play. So I've never actually gone like any kind of like long dated position in NVIDIA. I always warn people on stream, like particularly now, I'm like, guys, don't short it. It's gonna murder you. It's always been expensive. It will always be expensive. But it was like playing around with broadcast that made me, oh, okay, so it's not a chip play, it's a software play.
Yeah, it's funny you mentioned that because broadcast is probably like also the only software from Nvidia I use apart from like the the hardware that I have. Is I as well have like a I think I have a 2080, but yeah, I definitely see what you mean. I don't work in the industry where they say that they're doing a lot of AI stuff with like the metaverse building stuff and all their other projects, but it is interesting for sure. But
It's wild, yeah.
that's when you started like looking. Did you look into Nvidia at all before 2021?
No, in 2021, I really started looking at them a lot more carefully. But before that, I didn't give a shit.
Fair enough. I feel like I missed the Nvidia training. I was too young at the time. I had no money, but I remember the first time I started looking at Nvidia, it was 2015, and I remember it was giving like a 3% dividend at the time, which was on par with like all the other dividend stocks. And I remember thinking to myself like, wow, like how is Nvidia, this like software company, doing that? But Jay, so thanks for coming on, man. Like I've probably come into your stream for various times, and maybe 10 to 15 times, and I've really enjoyed it.
Well, thank you. I appreciate that.
Yeah, dude, I think you're super personable and super smart. So I'm more interested in if you can talk about your process for pretty much everything, like what sites you use, because I noticed you use a lot of FinViz, and I actually never use any FinViz. And so I'd love for us to maybe talk about FinViz and how you use it and things like that.
Sure. So no, FinViz is the main kind of visualization and data. So I do pay for the premium.
Oh, there's
and
a
so
premium
far
for
I
this?
like it. Yeah.
How long
There's
you been
like
paying
a
it?
premium. It's like, oh God, for about a year now, something like that.
Yeah.
And obviously it's it's not a full on like Bloomberg, but I respect it because at least the data's consistent. And I've found that whenever I've kind of audited specific companies based on like consensus, it's relatively close. It's not a perfect match, but it's relatively close. So I can appreciate that.
So when you
One.
audited companies based on consensus, it's close. What exactly is close? Like, what is this consensus you're auditing, and what is FinVid spitting out to you?
No, so like I've had like a few people inside like my Discord, for example, who've passed along like some of the research from like Bank of America or Citi or JP Morgan. And I've seen like, all right, so here are the EPS consensus numbers, or at least the EPS from that research group, specifically for say like Cleveland Cliffs or like Nucor. And I've been able to look like a year out, 2 years out, and I've been able to understand like, okay, FinViz is close. It may not be exactly like, hey, they expect
So
$4.50
on the earnings,
in
you
EPS
mean
for the next
specifically?
year. Yeah, yeah,
Oh,
yeah.
okay,
So
okay.
like FinViz, the part on FinViz that I really look very carefully at tends to be on like forward EPS or forward EP, forward EPS, gross margins, because semiconductors, that's actually how you're supposed to evaluate them. And I use it a lot for like the insider activity. And I found that to be really helpful. So yeah. So FinViz is number one for data that I use. If I, hopefully if this all continues to work out for me at some point, maybe I'll have the funding behind me to actually like splurge on the Bloomberg. That'll be fun.
That would
But
be,
yeah,
dude, that would be sick. Because I don't think there's anyone
oh,
in Twitch that has a Bloomberg, let alone like someone on Twitch with a Bloomberg terminal. Could you stream that? Because
I don't know if you could stream
you
it.
pull up FinViz, right? You pay for FinViz.
Yeah,
Now you stream the
yeah.
paid version of FinViz, I'm assuming, right?
Yeah, and I don't think I've gotten any shit from FinViz for it. In
Right,
fact,
right,
I have an
right.
affiliate link for FinViz, so I assume they're okay with it.
Yeah,
But I
yeah.
assume that if I had the full blown Bloomberg, I couldn't do it. Like,
Right, right,
I'm
right.
assuming.
Yeah, yeah. So I'm assuming you wouldn't do it. If
Well,
you had
yeah, until they
Bloomberg, would
told
you
me I
stream
had to.
it? Oh, you would do it until they told
Prob-
you you had to?
Probably. Like,
That's sick. That's
I don't
sick.
know. I'd have to see what I'd have to see what the like the licensing agreement. Like, what am I signing up for? If I'm signing up for the right to get like
Yeah.
personally ass fucked by Michael Bloomberg, no, I won't do
Well,
it.
isn't
But
it like
like,
$20,000 a year?
yeah, something like that. It's like no, it's like 26,000, I think. So it's a bit over like I think it's like $2,500 a month, something like that. So
Um,
yeah, to any subs who are watching me, I'm just saying, like, if you guys want to splurge on a Bloomberg terminal, your boy Jay is not complaining.
you should like crowdfund that with you have a pretty decently large community. I'm sure you could start like if you wanted to, but we
I
now
have a
what could,
decently sized community. I have a decently sized. I'm not. There's people there's people on Twitch who just talk about like GME who have a lot more people than me. So
yeah.
we have room to grow. That's
Yeah,
all I'm saying.
that's a cult. That's a cult for sure. Well, I mean, I hope you grow. I can't predict the future, but I have seen your stream and I've seen a lot of trading streams, and I think you're great. So hopefully you do grow and keep it up.
Well, thank you.
So actually, so I have some family that work in the industry, and they've told me that they just use Bloomberg really for the chat. And then I kind of saw that meme swirling around on like the Twitter people who work in the industry as well. And so now, I've heard that people just use Bloomberg for the chat. What could you get by, paying for that Bloomberg subscription you think you can't get from Finviz?
No, honestly, the ability to export the raw data. So, background for me before I started doing this, like kind of like pre-pandemic time, I built analytics functions for Fortune 500 companies. So I'm used to like working with like raw data, just exporting out CSVs, spreadsheets. I'd use obviously everything from Excel and Access. I'm old school. I'd use JMP software, believe it or not, it's a SaaS product. So like I'm used to like playing around with data. If I had access to be able to like export data, I would probably run a lot more of my own kind of analysis. The interesting thing is that I have a philosophical belief that right now there is no parallel for the current environment we've been in. The closest is honestly like 1946 to 1948, post World War II, where you had these big demographic changes, breakdowns in globalization, inflation, labor disruptions, etc. So it's like if I had the data to say like, well, the last 3 times that we've had, interest rates being like such, I don't think it matters. I think we are specifically charting a new path right now. So I actually think like a lot of times where people do like straight up analysis and like say, well, the last 4 or 5 times, like I'm on the applied statistics side of me, the guy who's done analytics at the corporate level is like, yeah, none of this is valid right now. You got to understand it's all a crutch. But if I had access and we're kind of like 2 years down the line, where I think we're in a more normal time, that's where I'd start looking for the correlations and being like, okay, so like, how does volume indicators really indicate, like, say, rotations from value to growth, et cetera? That's the stuff I'd like to look at.
Do you feel like the market even has quote unquote normal times? Because I feel like just in my own short experience, like there's always something. I feel like the market's always doing something new in terms of like especially for macro data because there's so much of it. But why do you think things are different or weird?
I think that's a valid point. So first of all, you have a lot more broader kind of, shall we say, retail participation. And don't get me wrong, retail has always participated. But the average day trader couldn't open up a free account with like Robinhood and with like $1,000 in their account, get access to a lot of like the real-time data and options trading activity that someone would have had, say, 10 years ago. So you obviously have, I think, a lot more just participation from a raw like headcount numbers. You also have, and I don't think people talk about this one a lot more international participation, where over the time period you've had rising middle classes in like Middle East, obviously Europe, Asia, etc. So a lot more people are playing at the same casino that we're all playing at. And obviously that impacts a lot of what we see. I do like the viewpoint of saying like, well, listen, we're never going to go into a time period exactly like we've seen previously. So like everyone talks about 2008. I was finishing grad school in 2008, 2009. Trying to get a job post global financial crisis was legitimately tough.
So you got out of school in the GFC?
Oh man,
like you're like the statistic people talk about. Like I remember when I was in econ, they talked about your exact people.
It gets worse. I finished undergrad in 2004, Indiana University, Kelley School of Business. Yes, anyone watching can probably age me by now. That's okay. So I finished up undergrad back in 2004, and the economy still hadn't truly recovered. Like I remember, in business school, like there was like one company, I forget the name of them now because they no longer exist, but they were like a really popular choice for like graduating seniors in my undergrad to go get jobs. It was a consulting company based out of Chicago. I wish I remember their name. They went from interviewing on campus during the fall, extending offers to multiple people, including like two friends of mine, to then by like February being out of business and obviously canceling every offer available. So like when I compare the time period, like 2004 finished undergrad, then 2008 finished grad school, 2009 actually. And I'm looking at those time periods and it's like I jumped out into the real world like at the worst fucking time. There's nothing I could do. And it was like, all right. I got lucky though the second time because I managed to have 2 job offers. I got lucky in that regard. But like that's why whenever I hear someone say like, "Oh, this is like 2008," I'm like, "Bitch, please, this is not 2008." Like 2008, McDonald's was like 3 days away from missing payroll.
Stop it.
It's a bit different. Yeah, look it up. There's
I believe you. You know what? I believe you. That's crazy though. Because I remember. But that was.
Go ahead.
Well, I remember in 08, like I was probably 13 years old back in 08, and I remember I'd have friends whose parents lost their jobs because they got laid off. And I remember yeah, go ahead.
No, I said the funny thing is are these friends whose parent lost job, were they in the financial industry or were they just
No, they weren't in the financial. Like they were just civilians. Like I remember in 08, it was different than any time I've seen in the past 8 years that I've been watching the markets, where like people in my life lost their jobs. The pandemic was a little different. Like people got stimulus checks and whatnot, but when things opened back up, I feel like a lot of people still had jobs. It wasn't. I guess I didn't see it as much as 08.
Yeah, it was because what I remember, like post 2008 specifically, I used the McDonald's example, and I mean like Wall Street people use that one as the example because basically it talked about what happened when all these banks stopped lending. And you might be seeing some of this pop up now. That's where this gets interesting because all of a sudden when the banks don't want to issue revolvers, when credit dries up to that degree, you're not talking about banks or financial firms or like commercial real estate losing money. You're talking mom and pops who anticipate having access to credit to do things like payroll and cover supplies to all of a sudden, nope, they're cut off. And that's what happened. And that was the big concern back in 2008. It was, oh my God, if the banks go under, quote, Wall Street goes under, Main Street goes under. And now when I compare it to like we're right here, where it's like, all right, fine. If First Republic dies, who gives a shit? No one cared Silicon Valley. We shouldn't have cared. But at the same time, now all of a sudden it's like, all right, well, let's watch to see how the banks are behaving. Because if they pull back credit to like small and medium-sized businesses, like we all talk about stocks all day long, but really America is driven by small and medium businesses. And if we crush their access to capital, like this is not going to be a good thing, I think, for the US from an economic standpoint. We don't want a world in which the big just continue to get bigger. So yeah, that's just my belief.
You don't want okay, that's an interesting kind of like a political stance there in terms of like the everything being monopolized more and more these days. Now if the banks know that they stop lending, if they stop lending it'd be bad, why would they do it? Why don't they just keep lending recklessly?
Well, that's the fun thing, because now all of a sudden, look at the example like Silicon Valley Bank. And I love this example. If you were a manager or an executive at Silicon Valley Bank, you lost your job, you lost money. Like, as much as like FinTwit goes crazy about, oh my God, look at the insiders dumping. Look at how many shares those same insiders from the same forms people use to know they're selling. Look at how many shares they went down with. Like, they're not happy. So there is like a personal accountability aspect which does play into it. We're not bailing out executives. I respect the hell out of policymakers on this one. We are letting the trash kind of die. The interesting question I think you kind of raise is, and this is total conspiracy theory, by the way. And I try to avoid that.
That's the best for me. I try to go towards that. Go ahead.
Yeah.
What's the conspiracy theory?
To what degree are we in a situation in which that banking crisis has changed the trajectory of interest rate hikes? Did we just let the private, like the venture capital, the group that's probably the most exposed to interest rate risk, did we just give them the ability to crush one of their own banks and thereby remove at least 50 basis points worth of hikes?
Who did?
That's
Sorry, no. Hold on. You lost me on this conspiracy. No. You lost me on this conspiracy. Who did?
Yeah, I got you. So, like the venture capital groups, I'm not gonna, like David Sachs, Jason Calacanis, like all those guys, the ones that were very quick to like scream. Yeah. The ones that were very quick to scream about fire. Okay,
yeah, in all caps.
And keep in mind, yeah, their private companies were getting bludgeoned by interest rate risk. Okay.
Mm-hmm.
So now all of a sudden they crushed one of their own banks and they get to scream out loud, oh my God, dear Fed, J-Pow, you can't keep raising rates. This will keep on happening. I see the
conspiracy.
Are we not going to really like increase interest rates because of these dipshits?
Well, do you think they're going to stop? Because I feel like they're going to keep increasing rates. Like, I think I saw today the market predicts like 80% chance of 25 basis points on the next hike.
I'm 50-50.
You're 50-50.
I think we should get. I'm 50-50, meaning I think there's a 50% chance we get 25. There's a 50% chance we get 0. I think there's a trap that's been laid specifically by the non-farm payrolls report from last Friday. If you looked very carefully, the last 2 weeks we've received multiple jobs reports, and all of them came in cold, i.e. like less good than the one on Friday, the non-farms payroll, the big one. That non-farms payroll report, that survey period ended like March 10th, the day before Silicon Valley went bust. So that data is old, and it's based on before the banking sector crashed. So was that
crash
data,
of the banking sector large enough to affect jobs data that much? Like,
well, supposedly we are. Well, supposedly we are seeing some lending now slow down. There was like a report put out just today. I think it was the H8 report. It was either today or it was over the weekend that basically showed that a lot of loan growth or loan extensions from the regional banks is going down. And I think that's something the Fed, if you know their background, if you know, don't ask, don't ask my background on this one. If you know Ben Bernanke's papers on like financial collapse and contagion, the number one thing the Fed's going to look at is availability of credit. Because while they want it to tighten up, to do their job of kind of, slowing down the economy, they don't want it to halt. Because if it halts, it's so much harder for them to kind of be able to truly fight it. So this is the situation where if you look back at the read through on their last FOMC, the reason I think that they didn't move their dot plot. Everyone's basically said like higher for longer, fine. Higher is about 25 basis points from here. Longer is somewhere into 2024. So basically less than about 12 months from now. The only thing I think that stopped them from actually moving their dot plot higher was the recognition that, oh shit, we just broke at least one bank. And we think that bank's a shitco, but we're worried what it could do for other banks expanding credit specifically, again, to small and medium-sized businesses. So.
Fair enough.
Does that make sense?
Yeah, no, I get it. Overall though, Jay, are you for like the next 5-year period? How do you feel about the market and its valuations for the next 5-year period? Because, and I'm assuming you're not this person. If I am, then I guess I'm wrong. But there's a lot of people who are just perma bears, doom and gloomers, and, they obsess over things that are bad. And I say that because just in my short time of watching the market, like I've seen all kinds of people from the mainstream, but also from smaller outlets who say, we're going to crash, bad data. How are you? Are you bullish, bearish? Are you a doom and gloomer yourself, Jay?
Oh, let's put it this way. The stuff that I'm more doomish on is not the market, it's general society. But my general viewpoint is this too shall pass. In fact, if I'm kind of coining an expression to describe like the next year and a half time period, it's the big meh. Because I don't think we're going to have a true crash. I don't think we're going to fly either. But longer term, from like a 5-year standpoint, honestly, I am generally speaking bullish. I lived through the introduction of the internet. I lived through September 11th. I've lived through all these big watermark events, lived through the pandemic, obviously. Society and the economy, the American economy, still progresses through. Nothing changes in that regard. But when I look at kind of what's ahead, the biggest thing to me is like this real big spark of innovation. You're kind of seeing it firsthand on like the AI hype right now. But that AI hype was basically created thanks to the fact that we miniaturized microprocessors about 3 years ago. Now we're able to take advantage of it. So if you go back for a second and look at the dot-com era, the dot-com era was essentially we networked the world through bad debt. And then eventually the companies which took on that bad debt went bankrupt and died or merged, etc. But we were left with all this networking. We wired the world. And then 4 or 5 years later, social networks monetized that value. Well, now about 2 or 3 years ago, we built out all this capability in like compute, microprocessors. And now we're at the time period we're going to start to monetize it. So like I'm a big believer in AI. I don't think ChatGPT is it. I think AI applications around like video analytics, etc. I think it matters a lot more. Productivity. I think just like the internet, business to business, that's going to be the driving use cases, the economic cases. It's not something just consumer facing.
Fair enough. I mean, I think AI is probably going to have all kinds of applications. I mean, like just with this Nvidia thing, right? This is AI powered, I'm assuming, the green screen or whatever.
Yeah.
So it'll
green screen replacement, which you can see over my head.
Yep. Yeah, why do you have that green screen if you already got the Nvidia, dude? You can just get rid of that. But
it works better. I'll say.
Fair enough. Yeah, I want to see. I lost my train of thought. Talk to me about some trading books you've read, some literature you've read on trading. Any people you look up to? Like, do you have any role models within the finance industry, and who are they? Things like that. Give me some like more literature on finance.
That's a good question. So, first of all, I will point out I don't read like books straight up on this topic. So right now I'm reading Chip Wars. I'm finishing it up by Chris Miller. I tend to read a lot of like historical or even like the pop science books. So everything from like Malcolm Gladwell books, Daniel Kahneman, Freakonomics, etc. Those are the ones that I love. My spare time in reading actual books, respectfully speaking, I don't want to fucking read Peter Lynch. I've seen enough of his quotes. I'd rather learn more about the history of business. So like one of my favorite books of all time is Barbarians at the Gate. And that's the whole story of the acquisition of RJR Reynolds and Nabisco. And it's a great book about Wall Street, a great book about, the greed of the 80s, etc. It's wonderful to read. It keeps me kind of jazzed up. But if I'm reading like papers or I'm reading like articles online, love Druckenmiller, love Charlie Munger. Love Charlie Munger specifically. And it's always interesting to like talk about like a Warren Buffett or a Charlie Munger and realize if they weren't running like billions upon billions of dollars, they'd be the biggest Wall Street bets degenerates that would exist. Like if you've read anything from, oh my God, have you ever read anything about like Warren Buffett when he was starting off investing and he was running like $20,000 to $50,000? He used to spend his time just diving into individual companies one at a time. He was ultra concentrated. He was looking for like,
could you not make the argument that he's still concentrated? Could you not make the argument? Could you not make the argument that he's still concentrated? I mean, isn't like 40% of Berkshire's stocks portfolio like Apple?
Apple.
Yeah, Apple.
Yeah, but he grew it.
Bank of America.
But he grew into that. He grew into that.
He did grow into that. I'll give you that because I think he like 4x that at least. He bought it back in 2016.
Oh, yeah. That's why people are always like, Apple needs to go back to back to a 10 forward PE, and it's like, what? How much of the company do you really want to let Warren Buffett buy at that point? It'll never hit 10 forward PE. But no, like specifically because of his size, Warren Buffett can't play like a lot of small caps.
Oh, for sure. Yeah.
There's certain companies.
They would do things. They would do different things if they didn't have that size, right? They would be
correct if he was smaller. And he's talked. Yeah, and he's talked about this several times. So, like one of my favorite companies, not stocks, companies, is Air Test Systems, AEHR. And I had done a lot of studying of that company, and it's literally like almost the perfect like Buffett stock. But he couldn't have been able to play it. It just crossed 1 billion market cap. But a lot of time that we were looking at it, it was like under like 300 million. But it's this like transformational like company that's in the shell of an old company that would manufacture like test equipment for the semiconductor industry. And it just so happens they built a brand new tool, which changed the game completely. So now it's more like a startup. And so the stock's gone like absolutely nuts in the last year. Absolutely insane. But it's like a real company. It's like, it's not a meme.
Let's talk about the disconnect between businesses and stocks, because it's interesting you say it's a great business. Why is it not a great stock? You know? What do you think about that?
Okay, so
aside from price. So let's say
price matters. But you're right. But aside from price. Yeah. But aside from the price side, yeah, I think that's a really good point. And I try to talk about that on stream all the time. It's like, there's a lot of companies I absolutely love where it's like, I'm not going to own the stock. Nvidia is a great example. If you asked me what's the next $1 trillion company, the answer is either Nvidia, TSMC, or United Healthcare. I truly believe that. Like, that's the space. I'm not going to own Nvidia because I can't justify it from a pricing standpoint. It's expensive. And a lot of my trading is more of a degenerate. I'm a trader, not an investor. I have a 401k full of investments, and generally speaking, those pay me dividends.
Yeah, let's talk about those.
Pay me suitable dividends.
Let's talk about those. What are your like longer term investments that you don't touch that pay you dividends? Like what kind of companies are you in?
So Qualcomm. Okay. Qualcomm's one of my favorites. Okay. CVS is another one that I'm a huge fan of.
Like CVS, the American drugstore with the long receipts.
By the way, the very long receipts. And by the way, I don't play them because they're a drugstore. I play them because it's the only combination of a pharmacy benefit manager, i.e. Caremark, plus an actual health insurance company, Aetna. And oh yeah, they also just happen to have a pharmacy attached. So it's the closest thing you get to true vertical integration in healthcare. So I'm a bit of a narrative investor. So I look for narratives, like themes that are worth investing in for like a longer time period. And one of my big ones is healthcare is expensive. Well, there's a lot of opportunity for technology to come in place and disrupt it. And America is old and rich. So CVS, Qualcomm, there's a shipping company, GSL, I really like. It's a boring company who just happened to sign a bunch of long dated contracts, during the midst of like really high rates about a year and a half ago. So like they're just going to print cash for the next 2 years, regardless of really what shipping rates do. They pay out a good dividend. I have United Healthcare, again, dividend. I think the one non-dividend stock I own inside, and I think they do pay out a dividend, but it's really tiny. It's actually AMD. And AMD is just going to curb stop
AMD
Intel
pays
for the
a
next 3
dividend.
years.
Oh my god!
Do they? Something
Is that,
small.
is that
like,
what you said? Well, I know Nvidia pays a small dividend too. They didn't get rid of that dividend from 2015 when I saw it was 3%.
Yeah. Oh no, AMD does not pay a dividend. They are doing buybacks, and I doubt they're even really using it. But AMD is going to be in a position, like mark my words, within the next 2 years, if they want to institute a dividend, they can. Like they're not going to be allowed to do too many more acquisitions. So, but yeah, like that's an example of another company that like I really like. So like my 401k, generally speaking, a mix of healthcare. It's got the indexes, of course. It's got some semiconductors. Yeah, then some shipping that gives me some good dividends that I feel like reasonably safe. Like, hey, even if it's a cyclical downturn, they're gonna do just fine.
Right. Yeah. Just
And some oil, and some oil.
Some
To
energy.
be fair,
Okay.
I have some oil. Got some energy. Yeah.
Let me ask you a hypothetical question right now. If you could only buy one index for the rest of your life, you make this decision now and you're stuck with it. So, the Dow, the S&P, the NASDAQ.
Oh,
Which one
man.
would you pick?
Oh man.
You can only pick one.
All right. Can I pick the Russell?
Of course, yeah. So you would buy the Russell for the rest of your life. And why is that?
Call me the optimist, but I still believe small to medium-sized businesses, and as they extend even into corporations, so of course they get larger, I still think that's kind of the lifeblood of innovation. Plus, there's 2,000 of them, so there's 2,000 different companies that make up the Russell. So even if you get a few of the shitcos, we won't mention any names. Even if we know we get some shitcos in there, there's still some legitimate good businesses, some good opportunity. Otherwise, I'd say NASDAQ. What we are capable of accomplishing in technology today, the NASDAQ really, if you rewind back 80 to 90 years ago,
yeah, give me a history of the NASDAQ in its inception.
Oh man, I don't know. But like, if you look back like 80 to 90 years ago, the NASDAQ would have been railroads. Like, there's something about tech that's timeless, and I want to believe tech can solve some issues.
I'm with you on that for sure. I mean, my answer would be NASDAQ as well. I see where you're getting the IWM from. I used to have like an annex chart of all these indices from their inception. And the Russell was actually the best performing one, which I found interesting because in the past 7-8 years that I've been looking at this damn market, the Russell's been kind of shit, to be honest.
Yes.
So it's
yes.
Why do you
think
that
is? There's a bias, my friend.
Why do you think that is? You picked the IWM. I saw the stats that the IWM has done great since inception. Why is it doing
but the last few years, because it doesn't represent safety, and we're in this unique time period like post-pandemic. Plus, I think there's a second issue, which is the rise of the modern American conglomerate. I'm talking about the mega caps.
Yeah.
Look at Apple.
Yeah,
for
sure. Well, they just buy everything. They just buy a bunch of private companies that are small that may have ended up on the Russell. Like, a lot of consolidation there as well.
Right. Do you imagine this? You're some small startup fintech company, or you're some like database company, and now all of a sudden on the fintech side, you're competing against Apple and Amazon. Or all of a sudden on like cybersecurity or database side, you're now competing against Amazon and Microsoft. That's got to be terrifying, particularly in a high interest rate environment where your cost of capital goes up. How much cash do these fuckers have on their balance sheets?
Yeah, no,
they're doing just fine.
Yeah, I see where you're coming from. Jay,
terrify me.
You ever track what large funds are doing? Like, you ever look at sites like Dataroma and see, what Berkshire bought or what, Ackman bought or sold?
Yes,
You ever do that? Talk to me about that. Talk to me
love it.
about that. I want to get into it, and I'm happy you're here, and I'm happy you said love it. Talk to me
Yeah.
about that.
No, it's fun to go through. Like 13F season's one of my favorites, and I want to start making it more of a regular theme on the stream.
Likewise.
Where once you get like that end of quarter, where you can start looking at the data to understand. All right, look what people were buying, look at what people were selling, and it's really interesting because you're almost breaking down these like mythical investment figures, particularly the ones that FinTwit cares about, and you're like, well, look what they did. Like all the people who bitch about like Nvidia right now, who also talk about how they're huge fans of like Druckenmiller. It's like, cool. You realize last quarter he bought Nvidia, right? And he bought it when it was like 30 to 35 times forward PE. Still expensive. I doubt he's still holding it. I doubt he's still holding it.
I didn't know Druckenmiller did that.
It's true.
No way.
Yeah, he bought Nvidia when it was expensive, and he's done very
totally off topic. But one of my favorite quotes from Druckenmiller I saw was that how he believes just doing 1 to 2 moves a year, 1 to 2 really good moves a year, is all you need. I think that like investing philosophy where you just do DD all freaking year until you get one thing that you really truly believe in, and you kind of do a large concentrated bet. That's interesting. What are your thoughts on concentration and diversification?
Love the concentration aspect, particularly because that's how you can personally develop a bit of an edge. Like, I'm not going to pretend like I can understand the healthcare sector plus the banking sector plus like coal stocks and steel stocks. No. So early on, I learned what I could about the steel sector. I learned what I could about the semiconductor sector. I still feel like I'm learning each day. But when it comes time for like a lot of the new sectors, I lean on very heavily on some of the people like in my Discord and on stream who background wise, I know plays in this space. So I don't have to bother to try to be smart at everything. I'll argue the smartest thing I can do is learn where I'm dumb and stay out of the way. So I tend to be a lot more concentrated.
So you stay within your circle of competence is what you're saying.
Correct. And I'm willing to outsource decisions or outsource the research to other people who I feel like are credible and smarter than me in these areas. And so far, I think that's worked pretty well. So now, obviously, with me learning a lot about semiconductors, I've been able to like I called over the weekend. I was like, oh, you guys watch. With that Samsung news, Micron's going to absolutely moon. And sure enough, Micron's up 8% today because Samsung cut production numbers. And if you look at the semiconductor investor playbook, like that's the most predictable thing in the world.
That's good that you leverage your community like that. You talk good things about your community like that. You have people like that in your community. What are your goals, Jay? Like, without talking shit and trying to be modest or humble or anything, like truly, what do you want to accomplish? Obviously, you want to keep growing your stream, I'm assuming, but would you ever want to have your own fund? What's your dream? You want to just manage as much money as possible? Like, how powerful are you trying to get on this universe, Jay?
So here's the truth of the matter: is I don't want to be a financial streamer. I'd actually rather be. I know. I know.
Shut up. What are you talking about?
I know. No, the crazy aspect is in a perfect world, I would love to be more of like a news commentator, particularly around some of the more like, say, political themes. So there's already some streamers, not going to mention any names, who do like a lot of like political stuff. But every time I watch them, you just get pissed off. You're like, oh, and that's the last thing I want to do.
I'll
not mentioning names.
I'll mention names. I'll mention names every time about Hassan or Destiny or
maybe.
Yeah.
So
you like?
So I want.
Tell me more about like the politics side that excites you. Like if that's what excites you, like get in. Let's get into that. You also you touched on this earlier. I was gonna bring it up. I forgot, but I asked you about whether you're a permabull or doom and gloomer. You said, you're a little bear society, not word for word. No, but like you said something specifically about society.
The more doomerish aspect to me is the idea like I don't think the market's gonna collapse. I think it's much more likely you'll see like some strains, some stress on like social fabric, because nowadays everyone is probably just as much polarized as they were, say, 15 years ago. The difference is now you can scream it out loud to an audience of like tens of thousands of people thanks to social media. So essentially, people are just as pissed off as they would have been a few years ago or a few decades ago, but their reach is so much bigger. So much bigger. Because I mean, I this is kind of nerdy, but it's kind of fun. Like, I remember growing up, like as a young kid, like age like 10 to 12, even like later than that. Like, my dad would turn on CNN. This is like CNN, like early 90s, basically, like back when it was truly just news. And he would watch it all the time. So like my earliest memories a lot of times was like watching the news, watching the media. I lived through the Clinton years. I lived through like the first Gulf War before there was a second one. So I've seen this like, or at least I've grown up through this like change in society, which is why I always tell people on stream, I'm like, please understand, like nothing's really new. This isn't too far off from what happened in like the 90s. It's probably not too far off what happened in the 80s, you know, war on drugs, etc., the 70s, the 60s, the 50s. We're just probably more aware of it now, thanks to the pervasiveness of media, particularly social media. In a perfect world, like I would love to cover like debates, like presidential debates, because I used to actually like live stream it with believe it or not, my sister, and we would talk mad shit whenever like the 2020 elections were going on. We used to talk just mad shit. Also 2016, about all the different political debates that were going on, and I actually like
who's that reporter Trump got into it with? In
Which
2016.
one?
In 2016.
Which?
Megan, what was her name? Megyn Kelly? Was that her
Megyn,
name?
Megyn Kelly, yep. The blood coming out of her,
Yeah,
you know.
yeah, the blood.
And you're like, what the f you say? I didn't know if you were talking about when he was like imitating the guy who had the condition.
The condition,
which to me was so much worse. But like I remember covering the Republican debates, and they were just like fascinating experiences. Because I remember at one point, like the debate starts off and Trump absolutely destroys like Rand Paul just out of nowhere, unadulterated violence, and I'm like, he just ended that man's political career right there. Yeah,
I think
that was classic.
I think you taking on politics is probably one of the most challenging things to do as a content creator. Truly, you know,
Yes.
there's that saying about how the two things you don't speak about in jail is religion and politics, and that saying applies to the real world. So my first follow-up question to all this, Jay, is do you say your political opinions on stream?
I try to hide
like
them.
what party
People
you're in? Because here's the thing, Jay, you can't hide them if that's what you want to do.
No,
Or
correct.
can you?
So it's always fun to explain to people that I'm like the most like ardent centrist imaginable. So like a lot of policies, like I've told people before, my vote from a voting standpoint, I tend to vote Democratic, and it's a really easy reason to understand. Their worst ideas they never get through, they never accomplish. They're incompetent. Unfortunately, I've had over 30 years of life in this world, well over 30 years of life, where I've watched Republicans get bad ideas and actually execute them, go through. So it's like, all right, so if that's the case, then that's fine. But like, if you start combing through specific
that is the
issues,
most interesting lesser of two evils to vote for a party I have ever heard, honestly. Like,
yeah,
your lesser of two evils is, are they competent enough to put their bad ideas through?
Yeah, the worst ideas Democrats try to pull off, they never pull off. They've never pulled off. The worst ideas Republicans, unfortunately, they did accomplish. Like, I've seen 2 sets of tax cuts, which quite frankly were stupid. I'm, by the way, here's the fucked up thing. On an economic policy standpoint, I'm a lot more aligned with like conservatives. Notice I don't say Republicans because I don't think they're actually conservative anymore. But like on a lot of like the social policy, I'm extraordinarily liberal. Like, and even that is a form of conservatism. Like, I don't think the government should be making policies about whether 2 gay people want to get married. Let them. Go ahead. Fuck, I'm not. But let them. I don't care.
Yeah,
that's
I feel
part of
like that, like,
get the government out.
Yeah, I feel like those are a no-brainer. I know abortion is obviously a little bit more complicated for some people, but I still kind of feel like abortion is also a no-brainer to me.
It should be a no-brainer.
I'm
Do we want to live
pro-abortion.
into a society?
I'm pro-abortion. Like
Do
if
we?
someone wants to get an abortion, go for it.
I am pro. I don't have a vagina, so my voice should never be that loud on this issue. But it's literally okay. The same society which tells a woman she can't do something is the same society that tells a woman she has to do something. So I'm gonna trust the women I've had in my life, the women I know, and say, you know what? I can sit the fuck down on this one. I don't have to have a loud voice. I'll choose where I live from a state standpoint, because that's the other thing that's so funny is like, if you have an issue with the culture wars or the issues, you can move. I can at least. I've lived all over the country. So it's like, I'll choose where to live based on policies. If I don't like, for example, like, oh, San Francisco seems to have a lot of crime. You know, they're not really building out a lot of houses. A lot of not in my backyardism. So
I don't know if you're gonna be sensitive about this. What state do you live in?
I'm in Georgia right now.
You're in Georgia? Have you been in Georgia your whole life?
No, I literally for like ever since I finished undergrad. Okay, I've basically moved like every like 2 to 3 years. I've lived all over the country. So I've lived in Boston, lived in Pennsylvania, I've lived in Texas, Illinois, Connecticut.
Is Georgia your favorite? How'd you end up in Georgia?
You what?
How'd you end up in Georgia? Is it your favorite?
I'd up in Georgia. So far, I like it. I'm actually looking after family here. That's the other thing is that I left a big corporate job. Part of it was just burnt out. The other part, and this is something I don't talk about too often, is I actually am a bit of a house, or not really a house. I'm a bit of a what's the term? I'm looking after family members who are medically not in the best position right now.
Okay.
This is not a permanent. Yeah, it's not a permanent thing. I'm a home carer, so to speak, and that's why like a lot of times being able to focus on this on like trading right now and streaming is really advantageous because I get to look after and make sure the family's okay. And at a certain point, once they're like set, if I want to go back into the corporate world, I can. But if I do that, chances are I'll leave this location. So, yeah, that's how it works.
Yeah, that's wholesome. That's wholesome. I'm sorry you're going through that, but
no, it's fine. It's fine. No, I listen. Pandemic wise, I didn't have a chance to see my family for like 3 straight years. It was way too difficult to try to arrange travel with what all was going on. So the fact that I actually get to spend time with my full family because they're all disasters. So I do appreciate it though. It's something that I didn't think I would have appreciated it say 5 to 10 years ago when I was all like corporate, etc. But being able to spend time, like I truly do treasure it right now. And I know it's not a permanent thing, but for while it's here, I'm going to make the use of it.
Let's get back to trading a little bit. How much are you trading every day?
Oh God, some days I don't do
what are
shit.
You trading? Do you make a living trading? You're a profitable trader?
Yeah. For now, I'd say relatively profitable.
What are the instruments you trade the most, or your methods of trading the most? And actually, you know what?
So,
fuck that. What are your thoughts on technical analysis?
Oh, I think there's probably value in technical analysis. So understanding things like here's stop losses or here are like levels of resistance or support. I'm getting a better understanding or comprehension of that, mainly because technical analysis, it's if enough people believe it to be true, it's self-serving. But like I've seen some people point out technical analysis and they've made the observation like, see, it predicted COVID. And I'm like, no, it didn't. No, it didn't. There's an entire branch of statistics. You will learn what's called spurious relationships or spurious correlations. You will learn what it means. You will know that's absolutely not true. But like, I think there's value in it. I don't use it a lot in my own trading, but I will I'll trust other people. I'm much more of a fundamentals or much more of a narrative trader. So then I'll sometimes turn to some people. I'm like, hey, if I like, on semi, ticker ON, if I like them in the future, what's a good level to kind of enter based on the technicals that you guys see?
Again, using the community for trades, Jay. That's very wholesome. But tell me about your fundamentals. Let's run a little bit of an experiment, if you will. Can
Sure.
we potentially get you to share your screen? I'm going to give you a stock and a ticker, and I want you to give me your quick rundown on what you would do if this was just to come across your desk.
Sure. So let me see. I should be able to share, and you can see it.
Yes, sir. All right,
All right.
type in
What's the ticker?
TTWO.
G
No,
T
TT.
W O
TTWO.
E T.
TT, like terrible trader. TTWO. This is my
Twilo.
person.
Take two. Take two. Okay.
So,
Holy shit.
so what do you do right now? You just moved on to take two. You said you're a fundamental guy. Let's fuck the chart. Let's go to the fundamentals. What are you looking at, and why?
You know my answer is going to be, don't you?
I have literally no idea, dude. I literally have no idea.
All right, this will be
Hold
funny.
on.
So,
what do you say? What do you say? What do you say?
two.
What do you say? No. What do you say? No. What the answer is going to be? Because I genuinely don't.
All right, so here's the funny thing. The answer to this one is, believe it or not, it has nothing to do with the chart here, and it's everything to do with Activision Microsoft. So if Activision is acquired by Microsoft, then this almost sparked a scramble for other game producer assets for Sony. So I'd make the argument right now that if you think Activision is going to get acquired, which I actually do, then there might be a long-term setup being created right now in Take-Two where Sony may go after Take-Two, or Amazon, if they want to step into the game space, might go after Take-Two. Because you basically don't have a tremendous number of publicly traded, gaming studios, gaming producers.
I've heard that exact argument before. I agree with that argument. I actually own Activision shares that I bought at like 73, maybe like. I got lucky. I got lucky, I guess, but I just felt like Buffett was in on it, and it was gonna go through. So now if Activision gets bought by Microsoft, really, in terms of publicly traded, gaming developers, you just have Ubisoft, EA, and really not much else. Yeah, Take-Two, Microsoft, EA, and Take-Two, and maybe a couple of other small ones, but there's only like a handful at most, and not these sides. But let's look at the fun. So I already see where your narrative just spilled in there. I see where you're coming from a narrative trader point of view. Now let's look at the fundamentals. What are you looking at?
Sure. So the three things that kind of sparked to me in a real interesting manner. So first of all, market cap. You got to understand market cap. Just because, especially if we're talking about anything on the acquisition side, you want to understand, is it digestible or not? Forward PE, I don't care about backward PE. I think too many people do.
What is backward PE, and why do people care about it?
Backward PE, people care about because it's easy to calculate. So if I know a stock trades at $10 a share, and I know that last year they made $1 billion in cash, and they have exactly 1 billion shares, then I know the forward PE is the backward PE is 10. Because I can just say the price divided by the earnings per share, the backwards, that's fine. The problem is I'm not buying a stock because I give a shit about what the company did the last year. I want to buy it for what it's going to do in the forward year. So forward PE is more difficult because it uses analyst projections. It uses the consensus, the sell side consensus, to say, okay, for Take-Two, you can see here, for the next 12 months, the anticipation is they're going to earn about $5.23.
Oh, where do you see that?
That's better.
Where do you see the $5?
So it's right here.
Okay, I don't know if EPS next year. I see. Okay, EPS next Y. Sorry, go on. Sorry.
Yeah, so I can already see that basically we're projecting out. The sell side's projecting out that Take-Two is going to make more money in the next 12 months than basically they've made in the last 5 years, any individual year. So I can see this trend here. The other thing that I'm really interested in, particularly for semiconductors, but it's also kind of cool here, gross margins. Now, gross margin might not be as valuable specifically for like a game studio, but for anybody who produces goods, it gives you an understanding of pricing power. So that's what I care about. But in this case, when I'm looking at Take-Two, really, it's forward PE. Is this company projected to be profitable moving forward? You can see the answer is yes. I can see their revenue trend versus their EPS trend. I'm looking at their shares outstanding. It does not look like they're buying back shares, but doesn't look like they're diluting heavily either. So that's not bad. And then as I go down here, I'm really interested also in insider activity. So yeah, I've seen people like point to like a long list of insider sales, and they're always like, "Look at them dumping on it." Well, when I look at this, all right, what I'm seeing here is that someone did 3 different transactions and sold less than 200 shares. They're sitting on 63,000 shares. Or hey, their CEO, they sold 152,000 shares and they still have 437,000 shares. So I'm more interested in when you see the share total go to 0. That to me is a red flag. And we have one of those, by the way, Coinbase.
Quickly before we get on Coinbase,
Yep.
you ever heard the quote where it's like there's a million reasons to sell a stock, but only one reason to buy?
Yep. Love it.
You love it, yeah. So, are you a believer of that quote? Does that make sense to you?
Yes. The only exception to that, again, is kind of what I just mentioned. To me, there's only one reason to sell. When you run your total down to 0, you're jumping out. That is the red flag.
When did this happen? March 27th.
Yeah.
Was this covered heavily by the media? This guy's down to 0. I mean, hold on. He only had 29,000 left, but he fully jumped.
But he
ship.
kept getting. Yeah. So supposedly, what he's been doing is he has a separate class of stock. He converts them into the common stock and then sells. So I think that's probably why he keeps going down to 0. But the fact that Coinbase knows they're under like SEC purview right now for selling quote unlicensed securities, like huge.
Wait.
Huge
Hold
red flag.
on. That's messed up.
Yeah.
Run that back. Let me get this straight. They can have a different class of stock that we can't see, that they convert to stock we can see and they sell. So is there things that I just will never know when I look at insider buying?
No, if you read their doc,
can I see what else Brian Armstrong has? Like, can I see that other class of stock somewhere?
I'm sure you can. Yeah, if you go to like the SEC, if you go to the Edgar system, you'll be able to see that.
Okay.
This is just the interface specifically for VinViz.
Okay.
That he has. That's it. Coinbase is a dual class stock company. So that's my understanding of what's specifically happening here, and that's to me a big issue. Like Coinbase is a bit of a disaster from like a governance standpoint. So I talk shit about this guy, by the way, on Twitter. So,
oh, Brian Armstrong?
Yeah.
Why?
Like because he released the what's it called? He released that message on Twitter saying like, "Oh, we're under SEC like investigation. Here's all the reasons I'm not concerned." So I basically posted like a snapshot of him selling, and I'm like, "Well, thank God, by the way, you sold a bunch of stock before this came to light. Like, we wouldn't want you to be like distressed."
Savage.
So fuck
Savage. Did you get any likes? Do you think he saw it?
I got a bunch of likes, but for my pals, no, he doesn't know who I am.
Yeah, fair enough. We are gonna end this very soon here, chat. So if you guys have any questions for Jay, fire away.
Yep, go for it. By the way, I can't see your screen, so if I pull it up, unfortunately, I'm pretty sure like I get feedback.
If you pull up what? Sorry.
If I pull up your stream, I'm pretty sure I get feedback. So.
Oh yeah, you will. No, it's fine. It's fine. All of this worked. Someone asked, "Does Jay like almonds?"
Like who?
Do you like almonds?
No, almonds are the tool of the devil. Buck Spencer. No, there's a whole meme about we have someone who's a very much an almond farmer. He does many things. He's very entrepreneurial, but he likes to troll. So bless his heart.
Hopefully this one doesn't get too out of hand, but is China going to invade Taiwan?
No. Maybe at some point, maybe in our life at some point, but not right now. Not right now. Basically, if China's viewpoint towards Taiwan is not going to be dictated by any other country, they'll tell you that themselves. China, if anything, wants to pursue peaceful reunification because they don't want to kill, quote, fellow Chinese people. If this is all, by the way, assuming that no one in Taiwan declares independence. If Taiwan declares independence, war happens overnight. But China's on a longer time frame than people give them credit for. Like the whole idea from FinTwit of, oh my God, Russia invaded Ukraine. This is China's chance. China wouldn't do that shit for anybody but themselves. So they're not going to move on someone else's timeline. Also, they're not going to do it until they know for a fact they can take out U.S. aircraft carriers. Anyway.
You don't think they can take out U.S. aircraft carriers right now? You don't think the Chinese military's got the sauce to take on America yet?
Not yet. They think the longer they can spend their time, the stronger they get. And I actually agree with that. I think the longer time goes on, the more they modernize their military, the more capabilities they develop, the stronger of a position they'll be in. But yeah, remember, they want to reunify with Taiwan. They don't want to destroy Taiwan. They don't want to rule over a kingdom of ashes. And that, I think, is the most important thing to kind of keep in mind vis-a-vis China and Taiwan. So
I've remembered a question I had actually about backward PE. If you go back to the fundamental, the number side here, I don't see backward PE on there. So I'm assuming that when you say
because
backward PE, take two is negative? Okay, so hold on.
So, well, yeah,
backward PE is not just PE? Is it just PE ratio or?
No, so let me show you, for example. I'll pick on the famed example from FinTwit, Nvidia. All right. Backwards PE is 158. So whenever you hear someone say Nvidia's PE is 158, up here at the top, see the PE?
Yeah, PE. Oh, that's what I'm asking. So is backward PE PE?
Yeah.
Okay.
Then you have forward PE.
Right. Okay, so backward PE is based on how much they made last year.
Yeah, so for the last 12 months, you can see here,
yeah.
Nvidia made $1.74. Hence why it's 158. But for the next 12 months, Nvidia is expected to make $6, so about 4 times as much. That's why when people complain about like, oh, Nvidia is 150 PE, it's like, you're just telling me you're looking backwards. Look forward for a second, homie.
I got you. That makes sense. Crypto. Is US dollar going to lose its reserve currency? I'm not a crypto guy, I'll be honest, like not at all. Curious to hear if you're a crypto guy. What are you?
I'm too stupid to play in crypto. I've said that for a while. I don't understand. There's no fundamentals behind it, so kind of useless to have me talking about it there. Here's the one thing I'll say in terms of like the US dollar.
Fiat. Yeah, just like fiat in general. Like
yeah. The US dollar, when people talk about the reserve currency, it's not what you transact in, it's what you store your currency in. And that's not going away yet. If we do see any de-dollarization, any global trends that move us in that direction, you're talking about a process that will probably take years to decades. But if that's the case, I mean, right now, if you're a sovereign country and you have $100 billion in reserve assets, you're not storing it in your own currency. What are you storing it in? You can store it in gold. That could make sense. Precious metals. That can also make sense. But oftentimes, what are you buying? You're buying U.S. treasuries. That's what makes the dollar strong. It's the idea that other countries, sovereign nations, want to hold U.S. denominated assets. It's not that they buy oil or goods in U.S. dollars. It's what they store their currency in. So Brazil can do a transaction.
You don't think that's changing anytime soon?
Not unless you get other countries that specifically want it.
Well, wasn't there recent news about that?
But look at the recent news. So you have Brazil and France. Yeah, so Brazil and France have both done transactions in Chinese yuan. What did they do after that transaction was done? I don't think they're holding yuan on their, quote, like national balance sheet. Like specifically for China, China floats their currency. All right. They peg it. So they choose what their currency is worth. They manipulate it. So imagine this. If you're Russia and you have, $300 billion or 300 billion yuan, overnight, China changes the valuation of it. You're fucked. Your money just went down by the signing of a pen, whereas the US dollar tends to be the reserve currency. It's where people hold their reserves in because of the liquidity provided, because it's traded on the open market, i.e., the US government can't sit there and say overnight, we're going to make the dollar worth this. No, the dollar fluctuates based on supply and demand, based on, millions of billions of transactions, in a given time period. So that's what kind of makes a lot more trust. So yeah, the big thing I'd say is reserve currency is not the same thing as transaction currency. It's what you are holding excess national reserves in. And until there's a more valid option than US T-bills, the US dollar is going to remain strong.
My last question to you is, and this is just like a yes or no, if you could.
Sure.
Do you run any FCFs or sorry DCFs or any? Do you have any models? Do you do your own models? I know you're a big semis guy. Do you have models for semi stocks you track?
No, I will trust others to do it for. So I'll look at the research and I'll kind of go along with them, mainly because who cares if a discounted cash flow statement says Nvidia is worth X amount or Y amount? We've had 3 years now of watching these companies not trade purely based on like discounted cash flows. So I'm much more trusting of the professionals who do it. So I'll look over their work. I know how to do it. I've done them before in undergrad, but I don't think it's a driver right now of true value.
Well, Jay, thanks
Weird,
for
huh?
coming on, man.
No, thanks for having
I
me. It's a
really
pleasure.
appreciate it, man. That was a lot of fun for me. I definitely got to pick your brain a bit. Maybe we can do this again
My
in the
pleasure.
future. But
Yeah, let me know.
keep doing what you're doing, man. I love to see it. I hope your stream gets huge. And
Thank you. I appreciate it.
yeah, man, keep doing what you're doing, man. Thanks for coming on.
All right. Thank you. You guys take care. Appreciate it.